Rahim,
Totally.
it's so nice to have you on the Critical Ask podcast here for Super Connectors. Before I'm going to let you talk, I'm going to give you a bit of context also to the listeners at home. You're building a company called Jawudi. You're an experienced entrepreneur by now. This is not your first startup.
Yep.
And what actually puzzled me when I was going through your CV is that you actually started as a materials science expert, and now you're building a platform that helps people that live outside of Africa to send money back back home. But you have a much bigger mission behind that, which is actually to help create a solid infrastructure of investments in back in Africa. And I'm going to let you do a lot more of the talking, but welcome on the show, Rahim.
Thank you, Alex. I'm excited to be here.
So tell me a little bit about your background, and then we're going to get really into your critical ask. So tell me, how did the whole entrepreneurial journey, how did it start for you?
Yeah, so that's a loaded question.
It is.
So I'll start at the beginning.
Yeah, let's start at the beginning.
So I'm originally from Guinea. I was born and raised in Guinea, West Africa. I moved to the US when I was 15. Initially, I came here just to kind of, actually I came on vacation, but for a number of reasons, I ended up staying. And went through high school here, went to college, undergrad here. My whole way through college, my plan was to become a medical doctor. Actually, since I was a little kid, I was dead set on becoming a medical doctor.
And here is New York.
Yeah, at the time in college, here I'm in New York right now. Yes.
Yeah.
But I went to college in Michigan, at Michigan State University, undergrad. Yeah. And so for undergrad, I just had to pick a major because it didn't matter. I just wanted to do it so I can get the MCATs and go to medical school. And so I ended up starting out the physics major, switched from physics to engineering because I liked knowing how to build stuff. But I did material science because the material science program was the only one that had a biomedical engineering option. And so I thought I'll be a biomedical engineer so that when I go to med school, I have not just the medical training, but I have the biomedical engineering training as well. I thought that would just be an advantage for me. So that's why I did that. Throughout college, learning engineering, over time, I started noticing that the reason why a lot of products, a lot of innovations don't see the light of day, it's almost always has to do with money. So, I started realizing that, okay, that is the reason why technical innovations don't see the light of day, almost always have to do with money, So I started taking interest in that. I'm like, okay, I need to understand how this money side works, how investments work. So I just started teaching myself about finance, how to do M&A deals. I started building discounted cash flows for fun when I was an undergrad engineering student. And just fell in love with capital allocation and understanding how you can use that to really make impact at a scale that I could never have as just a physician. You know what I mean? Mm-hmm. So I came back to New York, went to grad school. Came back to New York after undergrad. Decided I wanted to go to grad school, but instead of going to business school, although I liked finance and all of that, I felt like engineering is actually a better training for business than finance, than B school.
Interesting.
So, yeah.
Why?
So, business is fundamentally having a systems view of things, right? Of a problem space or something, breaking it down into its component parts, understanding what the frictions are, and reorganizing them in a more efficient setup, right?
Yeah.
And in some cases, adding new technology, et cetera, and building it back up. And that's fundamentally what engineering is. It's breaking things down to component parts and putting them back up, right? And the difference is it's actually much more rigorous on the technical side. And the math and all that stuff is more complicated. So if you come out of it, you have a much better head for numbers and systems and things like that, right?
Yeah.
And I just felt like my personal experience has been when I went to grad school in Germany and France, I realized that the research aspect of graduate studies is phenomenal for product development, like user research and stuff like that. You understand how to read documents and understand them and on and on. You learn how to learn much better,
Yeah.
So that's what that was. Came back to the States after grad school with the plan of becoming an investment banker, right? Or a management consultant. So I wanted to do M&A deal for technology companies, work for a little bit, make some money, make some connection, and then go start a startup, right? That was the plan.
That was around 2015.
2015. But I came back, and there's something my brother and I, we'd been noticing and complaining about since we're teenagers, and that is, given our, African origin, that we noticed in our lives in the US and Europe, the culture, the flavors, everything that the continent has to offer, is not really celebrated the way we felt like it ought to be, right? So you'll have here in the US, I could find products from all over the world in the mainstream markets, hardly anything out of Africa, other than, we source the raw material from there and we're digging some wells for some poor villagers in Africa, right? Like if it was celebrated as being like champagne, like it's something we're proud of, or Italian cuisine is something we're proud of, and we want you to know it's from there. So we started a company, my brother and I, to develop and bring to market food and beverage products that celebrate African flavors, aesthetics, and culture, right? So that's how the startup. We started that with a couple of $100.
Ginjan Bros.
Ginjan Bros. Yeah.
Yeah, I love the name.
Thank you. So that was my first foray into legit entrepreneurship, other than like hustling here and there in high school and college, And so that's what I did the last 8 years. But 2 years ago, Jawudi, as a startup, really came into the picture.
Yeah.
We actually had been thinking about Jawudi, some aspects of Jawudi for the last 10 plus years, honestly.
Okay.
It's just that it wasn't until very recently that I think we got to a point where I felt like, okay, I know I have what it takes to build something like this, because I understand the problem space really well, and I understand the solutions that need to be brought about, or at least, even if not the expertise to make them happen, I know what I need and who I need to help me make it happen.
Yeah.
Right?
Because by then also you'd build a network, of course, also through grad school, through maybe it's like through your founder network maybe, and that's where for you it started. But can you maybe, is there a specific moment in time that you made the switch to kind of go from this idea you've had for 10 years, something that you've kind of held close to you, something that you felt was important, and then you suddenly said, okay, you know what? Even though we're running this other thing, we're stopping or focusing on that now, and we're going to make time for this because it's time.
Yeah. Yeah. So it happened over a period of time, right? But the key triggers were we started seeing startups popping up doing remittances, like, trying to bring the newer technologies to solve this remittance problem specifically. But fintech in Africa started becoming big.
sending money back home.
That's right, cross-border transfers, right? Because for the longest time, the only games in town were Western Union, MoneyGram, and the informal network, right?
Yeah.
And so we started seeing a lot of startups launching with trying to do this, and a lot of them, most of them, we didn't feel like we're doing a good job. Mm-hmm. A non-good job in the sense that they could not build a good product, but they're only in it so they can get a piece of the market share that's there, right? And I felt like, no, there's nothing wrong with that, right? There's nothing building, It's just that I felt that they weren't thinking expansively about the opportunity that Africa as a continent represents, right? So instead of getting a little cut of remittance fees, right, there's a much bigger opportunity, which is investing in the development of the African continent. And fundamentally, I wanted to build a Rube Goldberg machine that would push money into investing in entrepreneurs in Africa,
Yeah.
And so that was, and then the pandemic, around the time the pandemic happened, I'd already been researching this. I would spend weekends, like every free time I have, I would take, I was taking software engineering courses, not because I wanted to build the product myself, but because I wanted to be really comfortable talking to whoever I had brought on as the head of engineering, right, to talk to them. And I'm an engineer by training, so I just needed to plug some holes, you know. And the pandemic hit. So we were doing research for a few years, and the pandemic hit. I was working 14, 16-hour days, 7 days a week, up until the pandemic hit. When it hit, naturally, we were running a startup, so we're still scrambling, trying to just stay alive. We had a cafe that we were running, so I had a brick-and-mortar location, so the finances of that business were struggling. But what it did was it gave me a little bit of free time for the first time in 8 years, right?
Yeah.
For the first time, I didn't have to wake up at 5 a.m. or 6 a.m. I could sleep until 8 a.m., 9 a.m., and then like hang out at the house until noon and like do a lot of the work on my computer, you know? So I used that as an opportunity to say, there's no better time to give Jawudi a proper go.
Yeah.
So essentially, we're one of the pandemic startups.
Yeah. A lot has started in that time. So,
Yeah.
Can you give me what for you is the big vision? So when is your work done with Jawudi?
I don't think my vision, I will be able to complete it, right? In my lifetime, right? But you know, I'm a big believer of this idea of the never-ending game, right? So I just, if that makes sense, like it's just constantly ongoing. But if I get to a point where access to capital, generally speaking, or resources, broadly speaking, like in capital is about anything, financial, technical, and relational resources. If we get to a point where being a founder in Africa, you feel like you have just as much of a shot at doing this as someone who's in the States or China or Europe, at least in that range, I'd feel very good about our vision.
Yeah.
That's the goal. Yeah.
Yeah. And I think that's an extremely ambitious vision. And you don't hear often of visions where the founder says, I don't know if I'll actually see it in my lifetime. And because it is something that's going to take an extremely long time. But good on you that you're taking that on.
Take it.
Where are you standing right now? I mean, you've been doing this for close to 3 years now.
Yeah.
I think you've assembled an amazing team. So I've seen that you have. Last time we spoke, you told me you had people that used to work at AWS or like had really high functions in venture capital. So I have a really good understanding also of how an economy works. Because I remembered asking you, like, if you want to create something that deeply rooted in like the infrastructure of a country, then you're changing an economy. You're not just adding like a small service, like, oh yeah, this is an easier way of sending money back to Africa, for example. So so where are you standing right now with that fantastic team that you brought along?
Yeah. So yes, you're right. It's been almost 3 years and we haven't launched, right? And the general startup mantra is launch as early as you can and go run fast. And usually people just take that advice and apply it uniformly, right? We work in financial services. So things like financial services and healthcare, it's things that impact people in a very deep way. It's not a consumer product. And so making sure that we have the licensing done right and we have our infrastructure fairly secure and operating within the law was extremely important to us. And that being said, the last almost 3 years, remember when I started this in 2020, it was just me, right? Like my brother and I would be throwing ideas around, but it was just me. So what happened the last 2.5, almost 3 years is built a team. So brought on a head of engineering. That was the first person that I really wanted to make sure that we have before doing anything else. But even interesting thing is, I don't know if people that are listening to this will be only startup founders that have already started, but for people that haven't started and are solo founders, the only advice I would give you is I knew that I had nothing to sell. Eventually, I had to sell the team itself.
Yeah.
Right? You had to recruit
and the vision. Yeah.
the vision. You had to send the vision. And to send the vision, it wasn't enough to just put a PowerPoint together and send it to them. So the first thing I did was hire a freelance designer and really I fleshed out the brand identity, what I wanted to do, and built it and designed it as if, okay, we have something in product. I even went through the process of designing some semblance of what the UI would look like. So that's what I used to start going and essentially recruiting a head of engineering.
Yeah.
Because the assumption they're being if they see there's already some work, this is happening, it's real, they're more likely to come on board. And that's exactly what happened. I was also fortunate to find someone that had been thinking about this space the same way I had, and even tried to start it with another person, but it didn't go anywhere, so I didn't have to pitch him very hard. And the second thing is, worked at AWS, he's a prototype engineer there in the financial services team, and his day job is helping Fortune 500 financial services companies in the States and abroad move from legacy infrastructure to the cloud. So I couldn't have found a better person for that. So we recruited the team and started building. And so today, this is a very long-winded answer to your question. Where we are today, we have a fully built team in engineering, compliance, and operations, and boots on the ground in Guinea. We've built the product. We've built the app itself. That's fully built today. There's only one thing missing, which is a payment processor that we can plug in there. We've built an internal tool, so internal dashboard for user management, for merchant management, because we'll have merchants in our network. So everything, so we can manage the operations, essentially the admin side of the business.
Yeah.
Of course, we built our website and all that stuff. And we are at a point where we're getting ready to go to market if we can find the last couple of missing pieces that we need to do that.
Yeah. And how did you manage to finance all of this?
This has all been my whole net worth out of pocket. My first business with my brother it was our friend and family round. So our first business funded a little bit of it, and I sold everything I have. I had a little bit of stocks. I liquidated all of it. I had done some legal work for someone, and I'm not a lawyer. And I made 20 grand.
Was that the 600 pages that you were reading of the FDA?
No, that was for Ginger Bros. This was it was a lawsuit that's someone was bringing to. It was like a personal injury lawsuit.
Wow, you played lawyer out of the blue.
Pretty much,
yeah.
So I put it all together, interface with the representative of the insurance company, and we went back and forth and negotiated it into a settlement, and I got it. Essentially everything a lawyer would do, and I made 20 grand in the process. So that 20 grand was what I actually used to pay our designer early on. Everything I don't consume every month, like my whole salary, literally everything I have is in Jawudi. So we've pumped about $300,000 into it today.
Of your own money. Wow.
My own money. Yeah.
That is dedication. And so now I think we're also getting closer to what is your critical challenge. And I think you already kind of alluded to it earlier, where you said, okay, so the payment processing provider, and that's an important part. Without that, there is no remittance to send home. Because in essence, I mean, we kind of touched upon this already, but in essence, what your platform does is it allows people to send money back home to Africa in a more efficient way, and you are retaining a percentage of those profits, which technically is quite expensive. I think it was up to 10%, if I remember correctly.
Yeah. 8 to 10% is the average cost to Africa.
8 to 10%. So for every $10 you send back home, $1 goes into the pocket of the payment company. And so what you're saying is, if we would take a larger stake, if we would take a smaller stake for sending back money, the last time you told me, I think it was 15 billion or something that would be per year.
Yeah.
10 to 15 billion per year would actually stay in the hands of Africans, or that could be reinvested in Africa. So that's also what your video on your website is saying. So what is exactly missing? So how? Because you're doing it now, I think with the blockchain, you're building on the blockchain. Why do you need the payment providers to work with you?
Yeah. So blockchain is awesome. It has the problem is it doesn't live on an island. It has to connect to what the existing financial infrastructures. Right? We need on-ramp and off-ramps from conventional fiat into whatever infrastructure you're using on the blockchain to move your resource, your value around, right?
Yeah.
And to be on an off-ramp, you have to deal with the legacy players. You have to deal with conventional payment processors, and you have to have banking partners. And not only because of the technical aspects of that you need to talk to those systems, but also because regulators, the current laws we have in the books, make it so that you have to talk to those people.
Yeah.
And for us, what the challenge has been is getting those people to give us the time of day and actually engage with us as a startup. And so we tried Stripe. They shut us down because the money service business license without engaging with us. We tried every payment processor we could think of. Yeah. And we know for a fact that those very same payment processors actually provide this service for existing startups like ours that are already operational in the space. And so that leads me to be like, it's really a relationship business like everything else. So just getting someone to vouch for you and say, hey, talk to these guys, they know what they're doing, and they have the compliance chops to make sure that they're not, that they're safe, they're not putting anything at risk. So the challenge has been just getting them to give us a time of day and give us a shot at I don't know, proving them right or wrong.
What do you feel is there what is holding them back?
My speculation is, these financial institutions, they're very risk averse, right? I think it's two sides. They're risk averse, and they're not exactly fans of enabling blockchain-based companies, right?
Yeah.
Because they might bring a lot more efficiency to the system, and these institutions run on fees, right? So enabling blockchain-based companies is not exactly a priority for them. But the second component to that is, I think it's a risk mitigation process, right? Startups, the highly regulated space. There's been a lot of startups that, use the move fast and break things mantra. Yeah. So they take that from the previous, whatever they were trained in consumer, and bring that to fintech, and they think they can just steamroll the financial services and disrupt financial services in the way they've disrupted photo sharing, right? But it's a completely different beast. And so they cut corners and end up being in trouble with compliance regulators. And every other day, you and I will read something about some fintech got shut down because they're playing fast and loose with the rules, right?
Yeah.
So unfortunately,
it's also
we
a
have to pay the price for that.
Exactly. Yeah. It's also a reputation that kind of precedes, let's say, I think the crypto market hasn't really built an amazing reputation for themselves after the FTX scandal.
Yeah.
So if you could just put a shout out there, not only what kind of company would you need, and try to be specific about. I think you already mentioned some examples like Stripe, but also who within that company would be most helpful for you.
So, if I could get anyone on the planet or any organization that's interact with, it would be the transaction banking team at Goldman Sachs, or equivalent, like JP Morgan or some global financial services company. And what we need from them is components of their banking as a service tools, and that namely payment processing, so you can do ACH transactions, RTP, and or credit processing, right? So some bank-to-bank transfer, the fastest one possible and the lower cost one possible, and then maybe an optional debit transfer, no credit cards because they're high risk, and with your emergency, we don't want to deal with that. Yeah. And the reason, so that would be it. So the payment processor, the reason why I would prefer a bank is because they have a banking license. They will also be able to give us an FBO accounts for our customers, and we'll be able to spin up accounts under there. it'll keep us out of the flow of funds, so will avoid having to get all the licenses needed. It's costly financially, and it takes time. There's no way to fast track that. Yeah. And having a global organization as a partner, like JP Morgan or Goldman or any of those teams, would allow us to expand quicker, right? So if we launch in the US, things work out, and a year or 2 or 3, we want to go to Europe, because a lot of our customers are in Europe, right? They're already there, they're operational there, they have licenses there. So it would be something like that, yeah. Sailing that, a banking as a service provider like Cross River Bank here in the United States, or something similar to that would be extremely helpful.
Yeah, and I mean, the tricky thing with startups is like which startup doesn't want a huge partner with an existing infrastructure as a partner, right?
Yeah.
And I mean, there's plenty of programs out there. For example, in New York, you have the Barclays Accelerator, the FinTech Accelerator of Barclays. So have you also like gone through those programs, or tried to get in touch, let's say, with where the barrier to entry is maybe a little bit lower than immediately getting in touch with the people that do that type of transactions?
Oh yeah, absolutely. So we got turned down by Y Combinator twice. We got turned down by the Barclays Accelerator. And a bunch of others, right? So we've been trying everything, accelerators, incubators. We applied to super connector events. We hadn't actually gotten. The frustrating thing is, okay, we had reached out to Cross River Bank, for example, went through the whole process, went through the whole due diligence, got a term sheet. We agreed on everything.
Yeah.
And they started sort of stonewalling us, like we'd send an email and we'll hear back in 2 weeks, sometime a month. And out of the blue, we get an email saying us, hey, we can no longer support your program. Okay? And we end up going and finding another organization called Prime Trust. And essentially, Prime Trust is a broker, more or less, right? So they build them. They're not the only one. There are other companies that do stuff like that. They build themselves as a API like technology company, but really they're just a broker, because they have a relationship with banks, exchanges, and payment processors. They bundle them as APIs and sit in between and collect fees. We're like, fine, right? We engage with them. We agree on everything. They approve our flow of funds. Regulators sign off on it. The partner banks underneath sign off on it. And one of their partner banks was Cross River, the very bank that had just wasted 6 months of our life and just like dropped us, was going to be the underlying bank providing us banking services through Prime Trust.
Oh no.
Okay? And we built all the integrations with Prime Trust, everything. And we're getting ready to essentially launch. And Prime Trust just got shut down a couple of months ago. And it got taken over. They got taken over by the Nevada regulators because they had been commingling funds, customer funds, with their operating funds. So after spending pretty much close to $100,000 in integration fees, our engineering cost, and all of that, we had to start over from scratch, right?
Yeah.
So
how do you get yourself back up?
We had found a payment processor. We had found a banker. We were ready to go to market, and this happened. Yeah. But
how do you get yourself back up after that, Raheem?
You assess what options are available to you, and you go after them. You fly on a whim to Berlin to talk to some kid from the Netherlands and see if they can help you.
Yeah. Yeah.
Yeah. Yeah. This is I know this is the startup life. Every chance I get, I tell my team, this is gonna be a lot more brutal than you think, and I think they always think I'm exaggerating.
Yeah.
Yeah.
When will you ever give up?
Whenever I had options. And I'm of the mindset that there's always another option.
Yeah, exactly. So I think it's gonna be a long time.
Yeah. No, I think this needs to exist. Whether if we cannot tackle the regulatory side. Right now, for example, our strategy is, okay, so we can get the payment processing and banking partners to launch a remittance component. We'll probably go to market with just a local peer-to-peer product in Africa, and enter the market that way. And as we work on solving the partner problem with on the US side, so we can do the cross-border transfers. So there's always a different angle, and we built really options. Good. Yeah, we have really good technology that is useful pretty much for any situation where you need to exchange value. So there are other applications that it can be thrown at if one else sells.
Let's assume the best. Let's say this breakthrough does happen. What would that breakthrough look like for you? And what would be next?
So, this is something we're pushing in tandem because we are getting ready to go to marketing side. So we're raising capital and pursuing this payment processing and banking partner in tandem. And so what this breakthrough will look like is us getting that partner, building out integration, and hopefully successfully closing our pre-seed seed round right now, which will be trying to raise like $3 million to go to market. I don't have much more than the 300,000 we've thrown at this already to keep it going. But I think we've built enough that, any investor in this space would respect what we've done with $300,000. We've done a lot with $300,000. You can hardly pay 2 engineers for $300,000,
For 3 years.
For 3 years, exactly. And then we'll launch and and get going. Hopefully get people excited about the mission. Give people a much better user experience than they're used to within the remittance space. Give a much better customer service. Like you will not believe how bad the customer service is in
Give me the worst
space.
example.
Well, the worst example is you cannot get hold of anyone ever.
Yeah.
Right? And actually that's not the worst, that's the norm.
Yeah.
Right? There are rules about you cannot send, if you send more than $3,000, you have to report it, right? But there are people here that have needs to send a lot more than $3,000. And there's nothing illegal about that. You just need to be able to prove that that's legit money and you're not sending it to finance terrorism or something like that.
Yeah.
But if you, right now, the way it operates, these cross-border transfer companies, they'll just shut you down. They're not going to reach out to you. You can try to reach out to them like, hey, guys, they're not going to reach out to you. They're not going to respond to you if you reach out. And the way I see that is, these are high-value customers that are trying to send more money through your channels, and you will not even respond to their emails.
Yeah. And also that money needs to go into an economy to be productive, to help it grow, to help it improve, etc. So exactly. I think that it's a really nice way to also maybe start rounding it off, because we've gone from the beginning of like what got Ibrahim as a material scientist into finance, because Ibrahim thought, why do so many of these really good ideas fail? And often it's a funding problem. And you saw that as a much bigger problem. So you got really interested in finance. You also put it into the context of your own background, coming from Guinea, traveling around the world, studying around the world, and seeing the huge disparity of how easy it is to get funds, relatively easy to get funds in Europe, in the US, and how much access there is to capital. And that's something that you've spent a lot of time building, first in your head for 10 years, thinking about it, improving it, mastering also finance to the level that you can also have intelligent ideas about it, because you said, it's not about studying business that made me a better business person, but understanding how all the individual components work, which made you a really good engineer. And that's what you apply also to Jawudi. You've then built that into a blood, sweat, and tears, 300K of your own money, put into a really beautiful platform that is built on the blockchain, which scares some of these people that are working in the payment providing companies. You were so close. You were
My
so
God.
close, and then unfortunately it didn't work out, and now you are kind of really struggling to find the right person to help you move forward. But you are a positive person, Raheem. You're always looking at options, and the moment you quit is the moment that you're out of options. And I think that's something worth applauding. And I hope
Thank
the
you.
listeners of this podcast will be there to help you out, Raheem, with their connections. So if you're listening to this podcast or if you're seeing this on LinkedIn, make sure to leave us a comment in the comment section who Raheem should be talking to, or send us an email to alex@superconnectors.io, and I will make sure to put you guys in touch. I will also, of course, link Raheem's email address, rahim@jawudi.com.
That's correct. Listen, Alex, that was such an amazing summary. I feel like I just wasted 40 minutes of your time. You could have just said that and then we're done.
Yeah, exactly.
Yeah, but thank you so much. And I cannot, like I mentioned at the beginning, but this is an invaluable service, right? That you're providing to founders everywhere. Every VC you talk to, right? One of the biggest selling point is like, their networks, they're connected, they're going to help you, the founder first, yada, right?
Yeah.
And essentially it's extending the Rolodex to you. And you said you're scaling that, right? Making that happen at scale, and exposing it to people that may not necessarily have access to those networks. And it's an amazing initiative, and there's a lot of justice in it. Yeah. And I really applaud you guys, and I hope it only grows from here.
Thank you, man. It's really nice to hear it, because I think the reason we started this podcast is that our mission is engineering breakthrough moments.
I love it.
And an event is a really great way to do that, because you can very purposefully invite people, curate the questions really well, and I think that does a lot, but it only does so much. So I think our goal is to have the breakthrough moment. Our goal is not to do events. It's a tool, and we're constantly rediscovering, like, we have to kind of keep going at it and have a long tail of the connection, and not just like a short moment. You can add someone on LinkedIn and then never speak to them again, right? So, I really hope that this podcast will help. So everyone, help this guy out. The end.
Thank you, guys. Thank you all.